Welcome friends, this is Ramkumar bringing to you the 30th episode of the Educative series. This will deal with the commentary on IPO of Brigade Hotel Ventures Ltd. This company is coming out with an IPO on 14th of July 2025 and this IPO closes on 28th of July 2025. Once listed, the shares of this company will be available in the Mainboard of BSE and NSE. The RTA for this company is KFin Technologies Limited. As far as the disclaimer goes, I am currently not registered with any regulator in India like RBI, CB, etc. So, to provide advisory services in the financial market. Should you want to read more about the disclaimer, please go through the slide in front of you. In terms of issue details, as we saw, it's open from 24 to 28 of July 2025. The anchor investors can invest into this company on 23rd of July 2025. The issue size is 5 crore 11 lakhs 93,987 shares of rupees 10 each. The minimum application is 166 shares, and this is a book building issue. So floor price being 85 rupees and the upper cutoff being 90 rupees. If somebody were to apply for the minimum lot, then at the lowest price it would cost him 14,110 rupees, and at the highest, that is 90 rupees, or if you mention cutoff in the application form, you will be paying 14,940 rupees. There is an employee reservation for the employees of this company where a discount of 3 rupees is available to them. Now I'll talk about a brief of the company. The registered office and the corporate office of the company is located in Bengaluru in Karnataka. This is a pure 100% fresh issue type of an IPO. There is no OFS or offer for sale portion. The BRLM, that is book running lead manager, there are two of them. They are JM Financial Limited and ICICI Securities Limited. The loans taken or money taken by the company from the banks, etc., is rated by ICRA, that is ICRA, with ICRA A with a stable outlook for term loans and ICRA A2 plus for short term loans. This company was founded in 2016. This company is in the business of being an owner and developer of hotels. Bulk of the business of the company comes from their own website or word of mouth, people coming to them directly because due to word of mouth publicity. 30% of the sales of the company is through broking agents. So this also acts as a strength as well as a weakness. Strength because the brokers can be pushed to get in more business, hence increase the occupancy rate. The negative is that if any of the broker decides not to deal with this company or the hotels of this company, then there could be a hit with respect to 30% of this business as of the day of this IPO prospectus being released. The company is currently managing 9 hotels across 4 cities, that is Chennai, Bengaluru, Kochi and Gift City, that is Gandhinagar, Gujarat. They are having 1604 keys or flat rooms, which could include different types of rooms. They have got an agreement signed, long-term agreement with Accor, which they have been signing for 17 years or they have maintained for 17 years, with Marriott for 19 years and Intercontinental for 13 years. With respect to number of hotels operated by the company with these people for the agreement, Accor it is 4, Marriott it is 2 and Intercontinental it is 3. The company also mentions the prospectus they are in the process of adding 5 hotels with the proceeds of the IPO as we go along. There is one material subsidiary of this company called SRP Properties Hotel Ventures Limited. Some of the land area and other services that is rendered to by this company is maintained by the subsidiary. So to which the subsidiaries made payment by this company which is coming out with an IPO. To that extent, there is a related party transaction. The objects of the issue is to do a repayment of the debts that they have taken for the company itself as well as the material subsidiary SRP. They are also planning to buy property from the HUF who holds part of the property in which one of the hotels is located in. The third possibility is the inorganic growth. That is, they are planning to buy hotel chains or hotels, individual hotels, to assist the growth of this company. Now, what about the monitoring of the money that they have received through the IPO in terms of spending it? They have appointed Care Ratings Limited to monitor the usage of money so received from the IPO. Now, just before IPO, they made a pre-IPO placement of 1 crore 40 lakh shares. This was done on 3rd of July 2025 to various mutual funds, various series of mutual funds at the rate of rupees 90. In terms of financials, we have revenue, a profit and total assets that we'll speak about for the 3 years 21-22, 22-23 and 23-24. The revenue was 146.48, increased to 350.22, and thereafter increased to 401.70. So you can see it's more than 2.5 times what it was 2 years back. In terms of profit, the first year was a loss of 82.7 crores. Second year was a loss of minus 3 crores, that is 3 crores loss. Third year they got into the black. Third year means 23-24. They have made a profit of 31 crores. In terms of total assets, during the said 3 years, it's 869 crores, followed by 840 crores, followed by 896. So you can see that asset value remains almost consistent or same across the 3 years in question. In terms of EPS, that is earnings per share, the company presently boasts about earning per share of 0.63, that is 63 paise. Now, if you look at the PE of the company, if you look at the base cutoff price of the IPO, then the PE is 134.92 times or 135 times. And if you look at the high price or upper cutoff price of the IPO, then it is 142.86, that is 143 rupees. This is pitted against the other companies in the same industry or peer group, as we say. The high PE is 229.34 rupees, and for low it is 32.20. In terms of industry average, it is 91.43. So this is comparison for you to look at. Now, the usual factors of the government policy, taxes, tariff, litigations and regulatory we'll talk about. The changing laws in any country affects the company positively or negatively. Same is the case with our company also. One important thing is about the ratings given to the country by Moody's and Standards and Poor's and other such agencies operating in this space. Any downgrade of the country, that is India, by any of these agencies would create a business reduction for this company. In terms of policy also, there are several policies that affect the company directly or indirectly. Some of the policies directly affect the hotel industry. Some of the policies affect the land on which the hotel is situated. Some of the policies affect the travel industry, which in turn affects the hotel industry. To that extent, all the policies that the government makes in our country as well as in some other country from where the tourists are expected to come to India and occupy the hotel, will create a business risk for this company. Taxes and tariff, the taxes as usual will be the income tax, GST, etc. Any increase or decrease in taxes will affect the company positively or negatively. Similarly, the tariffs imposed by any of these countries where the tourists come in from, any of the countries where they have these agents operating from, will create problems in terms of not being able to garner enough of business. Now, in terms of regulatory norms, as far as the present this thing is concerned, disposition is concerned, the existing regulators anyway they will have to report to, that is Ministry of Corporate Affairs, PF, etc. In addition to that, they will also report to the exchanges as well as SEBI, who is the regulator for the capital market. So they need to be clear in terms of fulfilling or complying with all the regulations in place. Now, as far as litigations are concerned, there are not too many litigations against the company or their promoters or promoter group or directors or KMPs. However, if any of these litigations were to go against the company, to that extent, that much of money will have to be spent by the company, and hence the bottom line will be affected. Last but not the least, the accounting methods used in the Ind AS, US GAAP and IRFS might differ slightly. To that extent, a person who is looking at the financials needs to know these three concepts to understand the deviations or differences. As we mentioned earlier, the company operates through a network of brokers or commission agents. So the commissions are payable to the company, to these agents, in the ratio of, or in the of the total expenses. In the year 23, it was 2.92%. 24 it was 3.46%, and 25 it was 3.97%. So you can say roughly about 4% of the money expenses goes towards fulfilling the commission obligation or brokerage obligations of these agents who are contributing to getting the rooms filled in for this hotel or business for this hotel. Auditors, the statutory auditors observations have been made, and this has been attended to by the company, so nothing serious seems to be available there. However, the company has mentioned that they will try to ensure that they will not be having such observations in future, but this is something that we need to note. As far as the what worrying factor is the attrition rate. The attrition rate for this company seems to be a little bit on the higher side, with 22-23 being 62.72%, followed by 24, which is 48.16%, followed by 25, it is 58.19%. So about 58% of the employees who join are leaving the company, resigning or by some other means in the year of operation. This disallows the company to maintain continuity of operations in a smooth manner. Of course, they will be having enough of procedures and processes to ensure that handover is done, but still the worrying factor is about the high attrition rate. The occupancy of this company, they claim, is about 80%, which is quite good from the industry standards. Now, if you look at the debt equity ratio, the debt equity ratio is a little bit on the higher side, with 23 giving 14.64 in terms of number of times. In 24, it was 9.11. In 25, it was 7.4. Debt equity ratio of 7 times is a little bit on the higher side, so the company should strive to get it reduced. The companies mentioned that the trademark is not in their own name, it is in the name of the parent company, that is Brigade Real Estate, which is in the real estate, so it belongs to Brigade. They have presently allowed them under the agreement to use it in whichever manner they want, except for selling it or renting it out to somebody without their permission. So the trademark is not the company's own, it belongs to the parent company. Now, the registered office in the corporate office of the company is on rent with one of the related parties. So to that extent, they may not be forced to move out, but if they decide to move out, to that extent, there will be capital expenses incurred by the company in terms of getting new offices done. The hotel properties also are on long-term lease with several entities, some of them being related party entities. The rent in terms of expenses is quite on the lower side, or it's very controlled in terms of the expenses. It is 1.77% of the total expenses in 23, 2.1 in 24, and 2.42 in 25. But however, as we all know, the rental expenses goes on increasing, so the company should have enough of income to ensure that the expenses do not go out of hand, and the percentage of the rent with respect to total expenses remains controlled. The promoter Brigade is the one who owns land pertaining to some of the hotels, some of the properties. Another this thing is the loans that they have taken, the company has taken, is taken from ICICI Bank, which is a related party to the merchant banker, which is also ICICI group company. In terms of insurance, they have claimed that they are presently having adequate insurance, but as usual, the insurance continuity needs to be maintained, so they should ensure that they are always on top in terms of having adequate insurance. Now we'll look at the summarization of the IPO RHP. We have summarized the RHP and placed it for you for your perusal. This is meant to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company before going out with the decision of going in for IPO in terms of investing or not to go in for the IPO. In light of the above, there is no reference to the correctness or otherwise of the price on offer, prevailing grey market price, possibility of listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel if you were to have liked the analysis. Should you have any doubts, queries and suggestions, please contact me at ramkbharosay@gmail.com. Thank you.